Okay, so let's talk about something pretty wild. We're going to break down how a war happening literally 7,000 miles away just made buying your next home a whole lot more expensive. Like, right now.
So, let's just jump right in. If you're out there in the housing market, you're probably asking yourself this very question, right? You had your savings, you had your budget all figured out, and then boom, almost overnight, it feels like the price of your dream home just shot up. We're going to unpack exactly how that happened.
All right, so let's get into the mechanics of this. This whole story doesn't start where you'd think, not with a lender or in a real estate agent's office. Nope, it all kicks off with a major geopolitical event. It's a classic ripple effect, like a stone tossed in a pond thousands of miles away, and the waves just slammed right into your bank account. So here's how the dominoes fell. It's really a simple 1-2-3 punch. First, the US and Israel launch a military campaign in Iran. Almost immediately, what happens? The global energy markets totally freak out. Gas prices go through the roof, and all that uncertainty, it spreads like wildfire into the financial markets, which spooks the lenders. And just like that, mortgage rates surge. It's a straight line from a military action to your mortgage application.
Okay, so rates went up. We get that. But how fast are we talking? And how big of a jump was it really? Let's actually look at the hard numbers.
And to really feel the sting of this, you got to remember where we were just a few weeks ago. I mean, just last month, rates actually hit a 3-year low. For a lot of people trying to buy a house, it felt like this little window of hope, a real opportunity where things were finally looking up.
And this was it. This was that moment. We're talking late February 2026. The average mortgage rate was just 5.99%. It dipped just below that big 6% mark, and suddenly houses started to feel, just a little more in reach.
And then this happened. In just a matter of weeks, that rate shot up to 6.62%. Now I know, that might not sound like a giant number on its own, but trust me, that jump from under 6 to over 6.5%, it has huge consequences for your buying power. So let's just cut to the chase here, the bottom line, because, percentage points are kind of abstract. What does this actually mean for your money? In real dollars and cents, how much less house can you actually afford today?
And there it is. That rate hike translates to a $21,000 loss in your purchasing power. Let me put it another way. The home you could have afforded last month, it's now priced 21 grand out of your budget. That is, if you want to keep that monthly payment exactly the same.
Now, where does that number come from? Well, it's not just pulled out of thin air. It's based on a super common scenario. We're talking about a typical buyer looking for a home at the median price, putting down the standard 20%, and this is the key, trying to keep their monthly payment exactly the same as it would have been at that lower rate.
Now, it's really important to kind of zoom out for a second. This one event didn't just happen in a vacuum. It's actually part of a much bigger picture of uncertainty that's really been the theme of this whole year.
And the timing on this? Oh, it just couldn't be worse. Seriously, this isn't happening in the dead of winter when things are slow. No, this rate spike slammed the market just as everyone is gearing up for the busiest time of year, the spring and summer home buying season, a time when competition is already insane. Inman News really summed it up perfectly. They said, mortgage rates have evolved this year amid political and geopolitical uncertainty. And that just confirms it, right? This isn't some one-off thing. The markets have been jumpy all year because of all the instability out there. This is just the most dramatic example we've seen yet.
So after all that, the huge question is, what now? What do you do if you're trying to buy a home? Where does the market even go from here?
And that really brings us to the big dilemma, the one that every single potential home buyer is wrestling with right now. In a market this crazy, do you wait it out? Do you gamble that rates might come down? Or is the risk just too high? What if they go up even more? Should you just lock in a rate right now, even if it's not great? That right there is the multi-$1,000 question, and man, there is no easy answer.